CNBC TV 18, celebrating 15 years of leadership.
Welcome back. Well, actually, the markets are a bit comatose today. I think they had a hyperactive day yesterday, and today it's barely 60,000 crores after a whole hour and a hectic hour of trade. Normally, 67,000 crores. There's hardly anything that has been done in the cash market, less than about 4,000 crores. Even in the F&O space, it's pretty quiet today. Clearly, market can't run so hard every day, catching its breath, as it were. That gives us a little more time to concentrate on the earnings that came by. PD Financial Services was one of the companies that reported numbers. The profit was down, but that was also because the previous year's profit was overstated by some asset sales. To get the real picture, we have R.M. Malla, the Managing Director and CEO of the company, joining in. Good morning, Mr. Malla. Just take us through exactly the profit performance. If you stripped off the extraordinaries from last year, what is the profit performance and what was the margin performance?
Lata, since I am coming on your channel first time in this year, I would like to begin by wishing you, your colleagues and all your viewers of CNBC TV 18 a very happy, healthy and prosperous new year.
Thank you.
And great work for last 15 years of leadership, and also great work for CNBC Awaaz 10 year.
Thank you.
Now, as you have very rightly said, this quarter is a pure interest income. And in fact, this is for the first time in a quarter we have crossed a gross revenue figure of 200 crores and our profit is 54 crore. If we exclude a disinvestment which we did in the corresponding quarter of last financial year, our profit is up by almost 44%. And same is the figure as far as the 9-month results are there.
Okay.
So we are, continuously growing. Our interest income is growing. Our NIM is well within the range in what we were having in the past. And the asset size also is growing, almost 75% increase as compared to 31st December 13. Now, so the progress is very good.
Okay. Mr. Malla, good morning. Thank you for your greeting and Happy New Year to you as well. Can you tell us what exactly the net interest margins were this quarter and what was the cost of funds as well?
See, essentially our yield on our assets is close to 13.70 and our interest cost is 9.37. So we have an interest spread of more than 4.3%. But if you compare NIM, because we have a very healthy capital adequacy ratio of close to 26%, so actually our NIM is almost more than 6%. So, and because our debt equity ratio is very low, 3:1. As you know, NBFCs can have, more than 5 times leveraging, but we are prudently, thinking of leveraging at a right level. And, yesterday's announcement of Governor of reducing repo rate by 25 basis point is going to be hugely beneficial to us because all our domestic borrowings are at base rate. So I believe once banks now start reducing their base rate, we will get a huge benefit and our NIMs as well as our margins will continue to remain at the same level.
Mr. Malla, none of the banks look very keen to reduce their base rate just yet. They were all hemming and hawing actually. But let me come to the provisioning part. Why were they higher and so much higher?
See, it's very interesting. We are one of the few NBFCs where we make provision of 50 basis point on our standard assets.
Oh,
As you know, a Reserve Bank has recently come only 40 basis point, that too over a period. But we have been providing 50 basis points. So what exactly happens? So even if we make some disbursements, let's say on 15 December, on 31st December, we have to make a provision of 50 basis point on the entire loan book, including the disbursements which we have made on 15th of December. So that's why our provisions are higher. And in fact, we continue to have nil net NPA, which is also a unique feature.
Sure. Can you give us the number on what the loans disbursed were this quarter? Last quarter, I think it was around 800 crores or so.
Yeah, it is in the same range in this quarter also. Now our loan book has almost reached 6,000 crore.
Are you seeing demand, Mr. Malla?
It's a very interesting question, Lata. We have lately started focusing on renewable energy. And within renewable energy, solar and also wind energy. And I'm very confident, the country is talking of 100,000 megawatt through solar energy by 2022. And the type of interest we are seeing now, not only from the existing players, but new large players who have not been looking at this. I believe what happened in Jandan, that instead of 10 crore accounts, we have 11 crore accounts or even maybe more. I firmly believe that India by 2022 will not only cross 1 lakh, and I'm seeing a dream that probably by that time India will become the largest solar producer in the world. And now that is one scenario. To just give the figures, suppose we do 1 lakh megawatt in solar, it's roughly about 7 lakh crore of investment. And if we do a 70-30 debt and equity, so it gives a scope of something like 5 lakh crore to domestic banks.
So your loan book you expect will rise because of solar projects?
Absolutely, renewable, both solar as well as wind. Because in wind also, the country is talking of 50,000 megawatt in next 5 to 7 years.
All right, let's hope.
And we are focusing, just to give you some, and it's a fantastic business to be. I mean, the country, it's a sort of a rent. Once you set up a solar project, your revenue is assured for 25 years. That is the period at which PPA are signed, and the technology is such that nothing happens to a solar project for 25 years, and sun is always there. And India is such a fortunate country to have sunshine almost for 330 days.
Point taken, Mr. Malla. We'll leave it at that. Thank you very much for joining us with your
Thank you very much for having me. Thank you very much.
Okay, the markets still remain extremely range-bound as far as the Sensex and the Nifty are concerned, but it's a very good performance of the mid-cap space, you'll have to say, 0.8% higher. So watch that space. Plenty of trading ideas will come up on Traders Only. But before that, we have an important guest to speak about.
Yes, in fact, UK Sinha won the 2014 IBLA for contribution to the Indian economy. So in this interview with CNBC TV 18, the SEBI chief talks about recent actions to enhance regulation of overseas derivative instruments, which equals to the rules that apply to foreign portfolio investors. Take a look.
Okay, the reason why I'm stressing on this a little bit more is for the last 1 year, and I know you watch CNBC TV 18 whenever you get time to watch TV, but we've been doing a regular segment on the channel called Did You Know, where one of our research colleagues has been highlighting companies where the fundamentals absolutely do not justify the stratospheric rise in prices that has taken place, and the illusion has been in many cases that much of this is trading to avail of long-term capital gains benefit, shell companies and LTCG benefits. So when SEBI did in fact take these recent actions over the last 2 months, we thought that in a sense we were vindicated in the reporting that we were doing.
You are right in that understanding. Absolutely right.
So I just want to know how much more prevalent is this? Because you've cracked down in 2 or 3 cases on a large number of entities. But shall we expect that this exists in many, many more companies?
Many more companies, the answer is yes. We have developed some internal models about how the prices have moved and how they are correlated to the fundamentals of the company or not. Based on that, we have come to a number of companies which we are probing, and definitely it is much more than what has already been done.
So we will see many more actions in the future against similar such efforts to rig the market.
We want to control this menace. We want to remove this.
CNBC TV 18, celebrating 15 years of leadership.